What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 27th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to dive into what may be one of the most important topics when it comes to investing, but for many people is one of the more uncomfortable topics. The idea of having an exit strategy, knowing when to take profits, and also knowing when to spot market tops. Now, I want to go ahead and just take a step back. This was a request that I had gotten on one of my more recent videos on the $200,000 roadmap for Bitcoin video that I just recently put out a couple days ago. And this was the top comment that you guys had requested in this case, or thumbs up, for me to do a video on. Now, I want to go ahead and make it clear here that we're not only going to be talking about the idea of an exit strategy, as I've already made a video and I'd like to reference you guys to that video, but also talk about the second portion, which is probably just as important. How do we dive deeper into understanding when we spot cycle tops? And outside of that as well, later on in the video, we've got a sponsored review of Energy. So stay tuned for that. You guys won't want to miss it. But let's go ahead and actually dive into this topic and understand how we can start to spot market cycle tops. Now, I recommend you stay through this video because it's going to cater very well to the previous video I already did, which I will leave linked down below, or you guys can find on YouTube, on building a crypto exit strategy. But again, I want to make something very clear here because, again, a lot of people will politicize, in this case, their holdings, or they have emotional ties to what they hold. They resonate with the projects they invest in, just like how someone might really resonate with Apple stock because they're a long time or a lifetime user of Apple products. But look, guys, to be honest, at the end of the day, when it comes to any asset class, no matter what it is, the important thing to realize is that your net worth in assets is not realized until it's realized, meaning when you sell it, right? But at the same time, the majority of the time, it's usually good to be in assets. But there are periods of time where you need to take profits. And again, this video will cover some of those kind of intimate, focused details that are really important to keep in mind. But I want to go ahead and cut to the chase. Let's go ahead and talk about the three key elements here today you can look out for to get an idea as to whether or not we're close to formulating a cycle top. There is no definite formula. I'm sorry, guys, but these three steps are going to help you filter out 95% of the pricing data in the certain time frame within the market to really get down to the nitty-gritty and know when the market is overextended. Okay, so let's go ahead and dive straight into it. The first component here we're going to be talking about is price analysis, right? And this is generally going to be invoking a mixture of long-term and short-term price analysis. The first way I go about doing long-term price analysis, or one of my favorite ways, even though we won't be able to dive into all the different ways today, my favorite one is cycle analysis. So this is something we've talked about. We even kind of hinted towards it a little bit within the roadmap to 200K for Bitcoin. And it's a long-term viewpoint where we're taking the entire history of Bitcoin. We're going to use Bitcoin really as our kind of model here to focus on, because even though there are other cryptocurrencies, Bitcoin is the largest cryptocurrency by far, and it is the centerpiece that drives bull markets and bear markets still to this day. That might change, but right now, Bitcoin is at the center stage, right? So when we take a look at the past three previous cycles, right, we have them highlighted here on the chart. We can see that they're not only expanding in time frame, anywhere from 11 to 13 months, more than the previous cycle. But outside of this as well, we also see that they have dramatically diminishing returns. Even though Bitcoin still produces phenomenal results and is still way outpacing on any given bull market or annual cycle, it's usually outpacing equities and other asset classes. It has diminishing returns. And that's something we need to have in mind when we set our expectations, not only for our own gains on investments, but also as well when it comes to when the cycle top might come in. So when we utilize those two frameworks here, we set much more conservative estimates for cycle tops, but we also extend our time frames according to history. And in this model here, we've met right in the middle between 11 to 13 months and 12 months, added to the previous cycle, which would be 47 bars on the monthly chart, or 47 months, right? So we're talking about going all the way here from December 2018 all the way to November of 2022. Now, some people will say that the cycle is going to top sooner. Some people are going to say it's going to take much longer and we can maybe even set in higher price levels. I'm following history here, guys. And what we can see here, if we draw a midline through this, we can see that we have a lot of striking similarities to the 2012 to 2013 cycle, where we had two times where we stepped over the midline. Usually we remain below it like we did here throughout 2011, as well as 2016 and 2017. All right. So This looks like a pretty solid model to follow here. History looks like it's repeating itself to some degree, not only to previous cycles, but that we're right in line with a reasonable range for where we're going ahead of time into 2022, right? And again, there might be some things that change, right? If major institutional capital came in all out of nowhere, right? If we had a couple other companies like Tesla coming in and buying Bitcoin, yeah, maybe that changes the dynamics. But what you tend to usually get is you get these overextended periods that usually fade back down below that line until we reach towards the parabolic euphoric phase where we get up to that next big even level, right? Where we do a 10x comparative to the previous high from 20K now up to 200K. And that's a really conservative ask, right? We're doing a 10x here versus a 20x multiple from back here, roughly around a 20x multiple from the 2013 high here to 2017. Again, diminishing returns. That's what our expectations to be. Now let's go ahead and actually talk about short-term price analysis here. Short-term time frame. I was getting caught up there a little bit. So first off, we talked about the long-term analysis, but now we're going to be talking about short-term price analysis here, right? So what are some signs here we can look for when it comes to short-term price analysis here for Bitcoin? The major thing I want to emphasize is that there's two telltale signs that give you a great understanding of cycle tops. And we'll go ahead and we'll take a look at some of the previous cycle tops to get a reading of this, right? So it's really determined by two major factors here. You've got continuous parabolic growth here, right, in the sense of price. You have a dramatic decline here, in this case, within a very short period of time, right? As the order book is very thin, you start having profit takers come in. And then what you start to have, you may even still have slightly higher lows, right? A more giveaway sign is having lower lows in price where, you'd have a low here, then somehow price would dip down this range, right? But in this case, in 2017, we didn't get this. What we did get though, which is usually the first telltale sign of a cycle top, is not only the correction, but a lower high, right? You can see here that the high is not, this relative high here around 17,000, significantly lower here, about $3,000 lower than the previous high. This is an important telltale sign because even though we do like to wait and see for a set of lower highs and lower lows, this can be a very good second opportunity, a second win to get out of the market versus trying to time the absolute top if you've missed this, right? So that's also why we don't want to sell down here as well, because it tends to be that when you have these pullbacks, buyers are going to come in and they're going to drive prices back up, right? They're going to come in, get that discount opportunity, whether it's short-term traders, whether it's those who were waiting for a discount, right? So we can see that we have a few key telltale signs here. I want to go ahead and we'll go all the way back here. Take a look here at 2013, right? Going into 2014. Same exact thing here. In fact, you had two opportunities to sell at that secondary high, right? Everyone, again, is always trying to time the top. And I'll go ahead and actually give myself a little bit of self-criticism. Going back in 2017, we were set on the idea that 10K, big even level, psychological range, that is going to be the range to sell. And in reality, where I had sold some of my Bitcoin in this case, and I still kept in the crypto market and then went on to invest heavily in altcoins, and that turned out really well. Then we called the top 2 days before that cycle had ended. The one thing I want to be very clear on is just timing the top in this case and trying to predict what level the market's going to top out at can be really bad because it went from 10K where we were starting to become bearish all the way to 20K. It doubled, right? So that's an important thing to keep in mind. But if we take a look here at market price, you had so many chances here to be able to get out at a really favorable range. You had not only a double top here in 2013, right? So price not only dipped down here to 800, that should have been a warning sign here. And from that point on, what you should be looking for is a rebound in price so that you can know, okay, I know prices come up, I know prices coming up. When I see the first day of red price action, in this case, or I start to see a couple hours of red price action where it's rolling back over again, you'll want to consider taking profit. But outside of that, you had so many other less favorable opportunities here. You had another further discount, an over 50% correction from the high to this down point here, and then a bounce up here back above 1,000. Great opportunity, not far off from the highs. Again, not everyone's going to time the top. Then you had another sell off here down to 380 bucks and a rally back up here to 1,000 again. You had the opportunity for a third time, not to get the absolute top, but to get close to it, right? So again, the bottom line here is, of course, I know we're playing a bit of hindsight with analysis here, but whenever you get this general discount and you get up close enough to the previous all-time high, once you've had that major correction after going absolutely parabolic, that's usually the time you want to be able to take profit. And then again, keeping in mind the psychological level here, you're up above $1,000, right? Again, you can start to notice this when you're going from, around $100 in price to 1,000. You're starting to add a digit here for Bitcoin. And those are the kind of telltale signs like, okay, we've had multiple corrections here. Price is making newer lows. I'm fortunate enough to get these opportunities where I'm revisiting back to the highs of these big even levels. It's now serving as resistance. I need to take profit. The bulls are not in charge, right? So again, just some interesting stuff you guys can keep in mind here when you're going about doing price analysis. But this is just one dynamic. We've talked about price here. I want to go ahead and chat about the next variable here, which is data science. And data science is going to give you a lot more structure than trying to guesstimate just price alone. So we want to use these things in combination. Now I want to share with you guys a quick aggregate data science indicator that we've created and we actually have for free accessible throughout the Dash Report, in this case for Dash Report subscribers. It's basically an index here in this case, or a data science aggregation model that takes in a score, creates a score in this case, from our favorite data science models in the market. So if you guys are interested in kind of streamlining and saving a bunch of time and being able to get some aggregate data science models, as well as analysis on other individual ones, you guys can always check out the Dash Report. It's a great way to support the channel. But I want to go ahead and talk about this. It's something called the Bitcoin Flow Index, right? And this is an aggregate, again, of some of my favorite data science models. And it gives a general score here that when we reach certain ranges, when we get up to this kind of parabolic range, anywhere from around 15 to 20 on the index, that's usually a cycle top indicator. Now, there were a lot of people who were calling that back in May of this year, April or May, we were having a cycle top for Bitcoin in the crypto space. But we can see here that we got nowhere near the highs of what we needed to get in order to get into that range where we should be worried. We would need a couple extra points to do so. And we also didn't sell off similar to how we did in previous bear markets in the sense of dramatic decline and continuation of decline with shorter, lower highs and lower lows. So now it looks like we're, again, still in the mid-range here waiting for that euphoric phase, right? Now this can be a great way to simplify it, but again, I'm not here just to push the Dash Report on you guys and stuff. Again, this is one of the features of it, but I want to make it very clear, there's a ton of free stuff out there in this case. We look at lookintobitcoin.com, which is a free source in this case. We get a ton of data science models out there, and I recommend you guys use it. You can also subscribe to platforms like Glassnode that have some of these indicators, but I gotta be honest, Look Into Bitcoin is a great free resource in this case where you can dive into a ton of different data science models out there. So again, I highly recommend you guys check into it. You guys can get some insights into the amount of wallets out there that have certain balances. But again, I wanted to, again, emphasize something that I saw from a lot of people. And this was this misconception, and I think honestly, I think one problem, and we have to be honest about ourselves, it's the same way how when you're at, for example, how I was criticizing myself earlier about trying to call the top at 10K, right? How you want to be the one thinking ahead, like, I know in this case the market is setting the top in, right, at 10K. I just know it, right? Even though it didn't end up being the case. There are a lot of people who purposely want to see their outcome become true in the market, right? And I think everyone has a little bit of bias. It would be ignorant not to claim that, right? Everyone does see things at a perception that will meet what they think is going to happen. But a lot of people back a couple months ago, back in May, were pointing, look, there's one data science model, the Pi cycle top indicator, right? The Pi cycle top indicator, it flipped here, right? Just like we did back here, and just like we did over here and here, this means that the market top is in, right? Well, in reality, Pi cycle top indicator, let's just go ahead and face it, is one data science model. There are dozens of data science models in the crypto space now. Using one anomaly or one play as your, absolute given gut feeling choice to go short in the market or sell all your assets may not be a good thing, especially if you're taking this position after prices started to decline a significant amount, just like it did in May, Right? We had a lot of people selling in the fear of May, but we actually held through. Not only that, we added in more because not only, if we take a look at the PI cycle top indicator, did we have this happen in the mid-cycle correction of 2013, where just a couple months later we soared to new all-time highs that were around anywhere from 3 to 5x, depending on what price range you're talking about here, from the previous relative highs in April 2013. If we go back to look into Bitcoin here, and you dive through any of these data science models, you'll see that we haven't compromised any of them, right? We never stepped into the overbought range on the 2-year MA multiplier, a very fun and famous data science model. Stock to flow, right? Still early in the stock to flow process. In fact, all we really did is have the mid-cycle correction here, similar to back here. And you can see the coloring is exactly the same in the sense of the length from the halving events. You can see back here in July of 2017. July of 2021, 4 years later, same exact mid-cycle correction before we continue on higher for the real parabolic phase, right? We haven't gotten overextended against the stock to flow model. We've done that every single time for Bitcoin. And it's not just the stock to flow model. There's a ton of different data science models. The logarithmic growth curves. You can look at the on-chain charts, the R-HODL ratio, MVRVZ score. There's a ton. I don't have all the time to dive into this today, guys, because I want to keep things short and relevant for you guys. But again, these resources are out there and they'll give you a good insight until you start seeing a lot of these data science models getting very, very close and starting to get towards that upper band where they're overextended. It's likely that you're not in a cycle top, at least according to history. And that's the best we have to work with, guys. Other than that, we're working with broad assumptions, and that's not very useful, right? We want to follow what we have to work with. All right. Now, the last one I want to talk about is actually probably one of the more simple ones to follow if you've got that itch for having street smarts in this case. There's some people in this case who are more analytical, more kind of focused on the numbers and might be incredibly intelligent. But for those of you out there who are kind of the average everyday, you have that kind of mentality too, where you're the average everyday Joe. And I gotta say, I think I have this in this case where I can kind of look at something and be like, oh, that's not a good sign. It's focusing on the herd mentality and psychological symptoms of a market cycle top. So what do I mean by this? What does all this word gibberish I'm saying actually mean? What I'm basically talking about here today is looking for the telltale signs in the headlines. Because the problem that I find is that people look to headlines for answers. And headlines, in the sense of what they're actually telling you, really don't give you great answers. What they can give you great answers of is basically if you can read through the lines of what these different headlines will inevitably mean, right? And I want to go ahead and talk about something here because this is going to shock some people. For example, this was really the cycle top indicator here for back in December 2017 when the CME, or the Chicago Mercantile Exchange, launched Bitcoin futures contracts. Now, I want to stand back for a minute because you guys might be thinking, wait a minute, isn't that really bullish news to have futures contracts, derivatives built around this really exciting new asset class? Isn't this further solidifying institutional adoption for crypto? Well, the problem is that in a lot of cases, as with all these news pieces, they're probably priced in already. Bitcoin, when this was first talked about in early December, late November, it was about a month ahead of time before when it actually launched. People have been buying Bitcoin from around 7K all the way up to 20K, almost 3x in price, off of mainly this news. It's why Bitcoin went so parabolic back in 2017. Well, we got a lot of this price action here. So when we see news that actually may appear as good, and everyone's expecting that when these futures contracts launch, the price is going to soar to 40K, it's going to go 50K, it's going to keep climbing. In reality, it's usually a cycle top indicator. One of the biggest misconceptions that people have when it comes to markets is that they think that bad news is going to drag down the market. And in reality, it tends to be that peak euphoria is the cause because the order book is incredibly thin, therefore price is starting to ascend parabolically, it's going up at an exponential rate. And then when any decent amount of sellers come in on that thin order book, they drag the price down. And this is exactly what we saw in 2013 and 2017, just like we talked about earlier in the video. It's the old famous saying of buy the hype, sell the news. Okay? So again, we can see all types of different things here. Again, a lot of articles back from 2017. This is on The Guardian here. You can see Bitcoin bubble warnings grow louder as futures trading begin on CME. And again, I don't want you guys to focus on what the headline says, but to focus on these catalyst events that are usually optimistic events, potentially being top signals. Now, one thing I saw that people shared about in this case, and I'll actually give credence to it, it was the day the IPO launched for Coinbase and also the day that Bitcoin topped. A lot of people compared that the Coinbase IPO was this cycle top, right? So Coinbase's $40-50 billion IPO happened to launch on the day where Bitcoin did top in April. It's at its absolute all-time high so far. But I want to be very clear with you guys in this case that even though this is a massive event, right, Coinbase IPOing for sure definitely could very well be one of the catalysts for that mid-cycle top correction. We're looking for massive catalysts. We're talking about massive waves of capital interacting with Bitcoin as an asset. An IPO, as much as this was great news, and I do wish all the best for Coinbase, this isn't enough to be able to really hamper down and drag down the crypto market, right? What really would be that catalyst would be something like a Bitcoin ETF. That's probably much more likely going to be the catalyst for the cycle, the market cycle peak or top this time around, because that involves trillions of dollars of liquidity and pension funds now being able to come to the crypto market, and more realistically, a probably increase of $300 to $500 billion of inflows over the next year or so into the crypto space. So even though, again, it's going to bring new liquidity, at the same time, people are buying into the hype and they're going to sell on the news, right? Again, that's the same what we saw with the futures contracts, and I think that that's going to be really important to keep in mind. And to be fair, I guess the IPO was a little bit higher here. This was at the kind of euphoric price range, but coin stock had basically sold a little bit afterwards. Again, overall, using these, whether you're talking about mid-cycle tops or you're talking about full cycle stops, again, I think this is a great example to compare alongside the CME, albeit on a shorter term time frame. Okay? So again, we've got a really good range of things to work with here, guys. We've talked about the signs within the media and the headlines that we can analyze, those kind of visual cues that, you know, showcase all of the hype and mania and how your grandma's getting into investing in Bitcoin and you didn't even show her how to set up her Ledger wallet. You've got, you know, for example, the data science models that are showcasing every tidbit of information as you get more and more of them starting to flash that red sign, that it could be a warning sign for the market. And you've also got as well the key ways you can measure price action and do just technical analysis in general. These are some really helpful signs you guys can use in pair with the other video that I've got for you guys where I go over how to actually set up a crypto exit strategy. And I highly recommend you guys check that out after this video. But before you do that, let's go ahead and dive into the sponsored review for Energy Network. Alright everyone, so in today's sponsored review, we're going to be taking a look at a blockchain network that's a favorite of ours here on the Data Dash channel, and I know many of you have heard me mention it more than once, and it's no other than the Energy Network. Now, I want to not only talk a little bit about what Energy is all about, but share with you guys that we have some breaking news for the project that you're going to hear first on the Data Dash channel, and it's no other than the fact that the Energy Network has finally launched the Energy Bridge. Now, this has been a huge feat on behalf of the Energy team, and it's really important for Energy to scale out long-term as a layer 1 competitor to Ethereum and other networks out there in the space. But I want to go ahead, before we dive into showcasing it live here on the channel and how it works and how the UX is extremely clean, I want to go ahead and take a step back to talk about Energy. For those of you who don't know about the Energy Network, it's a community-driven blockchain network self-funded by its founder, Tommy Will Power, who's also another crypto YouTuber. And ironically enough, we align a ton on vision in this case. We've seen a lot of projects succeed and fail, and Tommy has built out a great vision on how to actually reach his objective of scaling out DeFi for the masses, which is something I can really resonate with. Now, it not only provides a high throughput network for activity, but they're also bringing about some of the best DeFi applications onto this network. And in order to actually make these applications useful, you're going to need liquidity. And that has been the big focus point here on the sense of the roadmap for the team in building the Energy Bridge. So I've rambled on enough to provide a bit of context here for you guys on it. I want to go ahead and today show you what the bridge is. Now, what is a bridge to a network like Energy? What is the Energy Bridge specifically? What's its intention? The intention of the Energy Bridge is to allow for liquidity on other layer 1 networks like Ethereum, whether it be Ethereum coins or ERC20 tokens, maybe Aave or Uni token, to be able to be migrated over into the Energy ecosystem. So you can migrate them from one layer one protocol to another one. So you can trade them in a lower fee environment and utilize them within Energy just like you would within the Ethereum network. So today I'm going to show you how to actually bridge it, how simple it really is, but there's a few things you should have before you dive into it. You're first going to need some assets on an Ethereum wallet, likely through a MetaMask browser extension. And you also are going to need to have an Energy wallet. Now, to keep it very simple, I recommend you set up your wallet within your MetaMask extension if you're utilizing MetaMask already. And there's a great walkthrough online within a Medium article that I'll leave linked down below in the description put out by the Energy team on how to actually do this. So those are just a few things to have right away and to have a little bit of Energy set up in your Energy wallet just to make sure things run smooth, as there are always network fees on any network, but much dramatically lower fees than on the Ethereum network. So we've got that all set. Let's go ahead and dive straight into it, guys. We're going to first start by connecting our wallet here. Now, I've already done so. You just basically hit a confirmation button and boom, we're already inside the interface of the bridge here. Now, as you can see here, it's picking up that I've got 0.04 ETH here. And from the top part of the screen, we can see that it's already indicating that I want to bridge from Ethereum to Energy. Let's go ahead and actually talk a little bit about the objective today, what we're going to actually try and do. What we're going to do is we're going to bridge some assets from the Ethereum network, predominantly Ether in this case. I'm going to go ahead and send it over to the Energy network through the bridge. And from there, I want to go ahead and trade my tokenized ETH on the Energy network towards another tokenized ERC20 token through Energy Swap, the leading application that Energy offers so far within its DeFi ecosystem. And again, one of my favorites. I love swapping assets, right? So let's go ahead and let's keep it really simple here. Let's say, for example, and I want to showcase here as well, the kind of like freedom in this case that Energy offers here by offering a much more scalable sense of swapping. What we're going to do first here is we're going to go ahead and bridge 0.01 ETH here. Now, an important thing to keep in mind when we're doing this, we're moving a relatively small amount of funds just to test it out here today. But an important thing to keep in mind is that by actually submitting funds over the bridge, before we can initiate this, we need to agree to the fact that there's going to be a 5,000 block wait time on the Energy blockchain. Now don't worry, blocks go relatively quick, but this is in a visual sense about 3 days of waiting time before you can bridge assets back to the Ethereum blockchain. Now this is not because the Energy team in this case doesn't want you moving your assets freely back to the Energy or the Ethereum blockchain. It's solely for security in this case. Energy has a massive emphasis on making sure that your funds are safe and that no malicious actors get access to your funds or send funds somewhere where they're not supposed to go, right? So that's an important thing to keep in mind here, that purely in this case, it's meant for security's sake. So after about 3 days, I'll be able to withdraw it, but either way, I really don't care. I want to leave my assets on the Energy blockchain after conducting this swap. So let's go ahead. It's initiated here, and we're going to go ahead and broadcast the transaction. So we've got it good here. It should confirm in about 30 seconds. And we can see here right at the bottom hand corner of the screen that it's going to showcase the transaction of leaving the Ethereum blockchain and migrating to the Energy blockchain, right? So we're using the same address here. So in this case, it's very convenient. I'll go ahead. I know you guys might not be able to see it because the webcam might be in the way. But generally speaking, at the bottom, it's showcasing us the actual transactions. Our funds here have left the Ethereum blockchain to Energy. I'm just going to go through it. It should just take a couple more seconds. And we'll go ahead and get started on showcasing the swap here. Now, you can see here, one thing I want to talk about, and there we go. I just got the MetaMask confirmation. Very nice. What we can see here is within the bridge for Energy, what's great about it is that it not only makes it very simple to bridge, and if I wanted to go from Energy to Ethereum, I just simply hit this white button and it'll prompt me to switch my networks on MetaMask. But along with this, you've got all the other tools you need here. You've got Energy Swap, which we're going to dive to in just a moment. We've got the Analytics tab here, which is going to allow us to see the liquidity the different coins offer at different trading pairs there are. But also we can see a support and FAQ here. So if we ever need any help or we want to submit feedback, you get everything here. The Discord community, which is always active, and their Twitter page as well to keep up with any updates. So it's a really, really great place to just get engaged with the overall Energy ecosystem. But to save time, guys, I'm going to go ahead and wait for the bridge to complete, and then we'll continue going on to test out Energy Swap. Boom, there we go. We've got our Ethereum migrated from the Ethereum network over to the Energy network. Now, I want to share one quick tidbit that's important to keep in mind, guys, and this is usually what you're going to go through if you're bridging to any other layer 1 or layer 2. you are going to have to, within your MetaMask interface, add the token contract of the cryptocurrency that you're migrating or any other cryptos that you're migrating. So a way to do this is that you simply go over to the Explorer, in this case for any blockchain you're using. In this case, we're using Energy. And we're going to go ahead and we're going to copy the address of any of these. And in this case, we've added Ether Energy, right? This third one here. And you're going to go ahead and inside the MetaMask wallet, you're going to come down and you're going to add it. There's usually a little add token button. If you can't see it, because it always will prompt you to back up your recovery phrase, sometimes even if you've done it. So you can do the expanded view. And there we go. We can go ahead and add token and you'll copy it in there. Now I've already added it, as you can see here, but it should pop up. You hit next and then you're all good to go, right? So just wanted to share that with you guys as a potential hiccup, or it might be where you don't see the token coming directly to the chain. So now that we've got things migrated in, let's go ahead and start doing some stuff with our tokenized ETH on Energy, right? Let's go ahead and try the Energy Swap tool. Now again, when you go up to the page here, it's going to let you know in this case that all assets on Energy Swap are only tradable on the Energy blockchain. These are tokenized representations of the assets. We do not want to send them to other blockchains. Again, really big emphasis on user experience and security. I love it, right? I really like how Energy has good focus on this. Now, we're on the Energy blockchain. We could actually trade Energy tokens in this case. It'll by default usually prompt Energy. But to showcase the use case of bridged assets, let's go ahead and actually try to trade some of our other bridged assets on the chain. So it's going to listen out here, and we can see here that we have our 0.01 ETH that we migrated over. Now, 0.01 ETH, as you guys probably know, isn't too much, but that's actually a big point of the review today. I want to show you guys just how little you really need in order to actually start making useful trades on the Energy blockchain, right? You don't need to have these massive amounts of crypto in order to make sound trades. Now, I want to go ahead, let's keep it simple here. Let's say that I want to trade against Energy in this case, right? Excuse me, so I'll go ahead and select Ethereum, select the new token, I'll do Energy. We'll go ahead and click Max here. So what we can see here is the price impact is very low. I'm going to get a minimum of 17.35 Energy tokens, and I have a slight liquidity provision fee that I'm going to pay. It's about 0.3%, just like Uniswap or any other provider out there. So first off, I'm going to have to approve ETH in this case. Now this is the first transaction I'm actually going to be doing on the Energy blockchain throughout this entire process that we've been showcasing here today. So I'm going to go ahead, approve it. You can see that it's a fraction of a penny. In fact, what I'll actually do just to make sure we get it in there sooner is I'll go ahead and bump up that gas rate. Still paying less than a penny. Confirm the transaction. You can see that it's pending up here in the top right. So again, still using the MetaMask interface that everyone is practically familiar with at this point if you've interacted with the DeFi ecosystem. So we're going to go ahead and just give it a second to approve, and hopefully it'll get put into the next block. There we go, transaction confirmed. Boom. So it'll show here in the interface in just a second here, but overall on MetaMask, the transactions have been approved. We can either refresh the page here just to save, oh, never mind, before I even hit it, approved ETH transaction. So now we've approved in this case, let's go ahead and actually swap it. All right, the approval is something you have to do even on the Ethereum blockchain. It's just to make sure that you can actually interact with those tokens on a specific blockchain. So we're gonna go ahead, hit swap. We can get at all the details here. Price impact is really low, right? We're trading with a low level of liquidity, right? And we'll go ahead, as always, I'm gonna go ahead and bump up the gas here a little bit just to make sure, right? I always like to make sure my swaps go through. So go ahead and click confirm. Transaction confirmations. Yep, and just confirmed. So let's go ahead and actually see if it's been reflected. We can already see a hint here that we've got a change in our energy balance here. Okay. Look at that. Boom. 18.62 energy comparative to the 1.6, I think it was like 1.69. I can't remember the exact balance, the original amount we had, right? So now we've got a lot more energy in our wallet, and we've cleared out our ETH balance. Right? So we can see here that the swap mechanism's working great. And one thing that's important to just provide a bit of peace of mind here, I thought might be good to showcase that we can go back to Energy, and again, we can initiate that withdrawal back chain. All right, because I think that's very important to showcase that. So we'll go ahead and do that real quick. So we're going to go ahead and change our assets here. We're going to swap from Energy token to ETH. Right? Swap our max amount here. Now the important thing, one little tidbit to keep in mind is you don't want to expend all your energy because you're always going to have to pay a little bit of a network fee. Now, again, it's like a penny in this case that you have to pay. So what we'll do here, just for simplicity's sake, so we'll go ahead and swap back from 15 energy back to this wrapped ETH, this tokenized ETH. Go ahead and swap it. We don't have to approve anything now. Energy is a native token, not to mention we already had agreed to utilizing these tokens before. Go ahead, bump up the gas fee a little bit. Confirm swap. And we'll go ahead and see if it processes through quickly and soundly. Boom, just like that, we were able to go from our tokenized ETH over back to Energy. So we conducted 2 clean swaps here on the Energy Swap platform. And again, whenever we want to, we can bridge back to the Ethereum blockchain. Now it's important to note, depending on the network fees in this case and the gas that is going to be required to bridge back, guys, it's important to note that you will need a decent amount of energy to revoke back to the Ethereum blockchain, because these are complex transactions. When you're interacting with bridges, it's the same with coming from the Ethereum blockchain to Energy. So again, bear in mind that there are some of those costs to keep in mind. But nonetheless here, we can swap back and forth between these tokens. It feels just like I'm on the Ethereum blockchain, except I'm paying a fraction of a penny versus paying 20 to 30, if not 40, 50 bucks or more to make a swap. And this is what Energy is all about, guys. It's about democratizing decentralized finance, making it accessible for anyone to participate in. And I think that that is something that's really beautiful in the sense of the vision that Tommy and the team have. And they did a great job on making this bridge functionable with a very short period of time, I'm able to move over. The only thing I'll say in this case, guys, and I bet Tommy and the team are going to continue to work on this, is that there are a few of those nuances where you have to make sure you follow the right steps. You got to load up your Ethereum and Energy wallet. First, you got to get them set up, get your assets loaded into there, some Energy in the Energy wallet, a little bit of ETH for gas in the Ethereum network, and make sure that you follow the proper steps in the bridging process. But the bridge itself is actually really simple. It's a really great system. And I think the Energy team did a great job on the interface that they built. So if you guys are interested in testing it out today, I'll leave the links that we talked about down below in the description of today's video. But as always, thank you guys so much for watching the channel. As always, if you liked the video, drop a like. Let me know your thoughts down below in the comments on Energy's bridge. I'm excited to hear what you guys think. But until the next video, I'll see you all in the next one. Take care, everyone.